Good evening, ladies and gentlemen. I'm Akash, moderator for the conference call. Welcome to Dishman Carbogen Amcis Ltd. Q1FY27 earnings conference call. We have with us today Mr. Stefan Frischi, Chief Executive Officer, Carbogen Amcis, Mr. Harshil Dalal, Global Chief Financial Officer, Mr. Paolo Armanino, Chief Operating Officer, India, Ms. Angela Amarix, Chief Commercial Officer, and Ms. Krishna Patel from EY. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone telephone. Please note this conference is being recorded. I would now like to hand over the floor to Mr. Stefan Frischi. Thank you, and over to you, sir.
Okay, thank you very much. Welcome everybody to today's investor call to talk about the Q1 26-27 financial results. As you heard, this is Stefan Frischi speaking. I'm the CEO of Carbogen Amcis. Before we go into the financials, I would like to give some brief operational update about Carbogen Amcis, followed by Paolo's update on Dishman Carbogen Amcis operations. But let's start with our sales activities, what we have done in the past 3 months. So quite some changes happened in this area. As you know, I mentioned this in the past, our slogan is be close to the market, be close to the customers. And with this slogan in mind, we have hired a new Global Chief Commercial Officer, namely Angela Amarix. And I'm very happy to introduce her, and she will address some words to you at the end of this presentation. She brings decades of experience in the CDMO business. She was working for highly recognized CDMOs in the past and brings a remarkable network into our organization. New sales leadership team has been hired for India as well. This intensifies our focus on our sales activities. We continue to strengthen our sales force remarkably, and we will keep doing this. All this in mind, we want to be more agile and more active on the market. Some other keynotes. Our Sprint initiative, you might remember, the Sprint is our initiative to acquire early phase projects in Carbogen Amcis. Is quite successful. It resulted in positive results, and some nice and promising projects could be acquired. Also, the package drug substance, drug product is being promoted and being continued to be promoted. It's of high interest from our customer side, especially in the field of the bioconjugation space. Last but not least, close interaction between Dishman Carbogen Amcis and Carbogen Amcis is intensively increased and promoted and shows some good successes in the market. Multiple processes are being transferred from Carbogen to Dishman in India. Customers will benefit from lower prices, but still get the high quality as usual. Generally spoken, the order income is picking up, also market pressure is still existing. So let's come to our business units and let me share some words about this. Starting with our French subsidiary, the drug product, which is located in Saint-Cyr. We are more recognized in the drug product market, hence more RFPs are obtained. Also, market shows some challenges, but still we could increase our quotation rate. Some new project could be acquired during the last quarter, and some big pharma audits occurred with very positive outcome. So this is very promising, and we are confident that we can get into more business with also these big pharmas. Still, in parallel, we keep our cost control rigorously pursued. Drug substance. We could successfully transform multiple phase II projects into late-phase programs. More than 10 late-phase projects, including TPQ campaigns, are now in our portfolio, actually more than 13. Among normal APIs, also ADC-related molecules with higher priority status at the FDA are secured. And this is important for future commercial product supply. Also, FDA inspections are scheduled for later this year. More information to be communicated once it happens. Just recently, a new commercial product from a big pharma has been approved by the US FDA, which add another commercial product to our portfolio. Also, the co-investment with our Japanese clients is proceeding nicely, and it's on track. So we're still expecting operational to be in the course of next year. The specialty, that's our cholesterol and vitamin D and analogs business, has nicely developed in the first quarter. Especially the VDA, the vitamin D and the analogs business, has increased its sales, but also the margin, so which is very good news for us. Also, we got new wool-grade sources with more attractive prices, which could be accessed, and we are confident that this will continue, talking to different suppliers. Still, the cost reduction programs across this business unit are still ongoing and result their first results. New markets for cholesterol, but also vitamin D and derivatives are accessed and penetrated. For example, in Vietnam, in Africa, South America, etc. Last but not least, the collaboration with Dishman Carbogen Amcis is very important, and it gets increased importance. Numerous transfer activities have been initiated with the goal to produce the corresponding commercial products in India to the benefit of our customers, but also to guarantee higher margins for our group. So this is what we call active life cycle management of commercial products. That's an ongoing effort. So with this, I would like to hand over to Paolo, who gives you more information about our Indian operations.
Thank you, Stefan, and good afternoon to all the shareholders. I would like to start mentioning the very recent inspection by the Ministry of Food and Drug Safety from the Republic of South Korea at Naroda site. The MFDS inspection was successfully completed, and it underscores once again our unwavering commitment to quality, compliance, and operation excellence. This achievement also reflects the dedication and expertise of our team, whose relentless focus enable us to consistently meet the highest standard expected by global regulatory authority and customers. Just in the last 1 year, Naroda site faced and successfully completed the MFDS Korea and the US FDA with no observation. As of today, both Basel and Naroda site hold the certification from all the major international health authorities. From a regulatory standpoint, we keep filing across many countries worldwide, including the APAC and the LATAM regions. And just very recently, Dishman Carbogen Amcis Ltd was granted in Europe with 2 CPs from EDQM. Additionally, the 2 new medical soft gel drug products were recently also approved in Myanmar. In the last quarter, we continued our journey, which is aimed to strengthening the relationship with Carbogen Amcis on tech transfer of legacy products and the CDMO business. The journey is proceeding, as Stefan said, very steadily, showcasing a great interaction between teams with a strong focus on the final common target. I'm glad to inform you that a commercial contract was already signed with the US company to tech transfer a legacy project from Switzerland to Basel site. The activity has been already started, and the project should be completed within this financial year. I'm also extremely pleased to inform you all that a second major legacy project tech transfer has been approved by a prominent Swiss MNC thanks to the strong contribution of the Carbogen Amcis commercial project management. Also in this case, the project has been already initiated. In addition to what just said, 3 other tech transfer projects from Switzerland to India are in advanced phase of discussion. As already mentioned by Stefan, from June, we are having a single point of contact for what concerns Carbogen Amcis and Dishman Carbogen Amcis commercial teams. Ms. Angela Merrick, Chief Commercial Officer, is now leading the group's sales, marketing, and market intelligence teams. We are all very excited to work with her to strengthen our strategic business development, and we look forward to meeting her in India just in a few weeks. In Naroda, CDMO business-wise, we are witnessing very interesting development. First of all, we are very proud to have supported with one of our quarterly results, the launch of a microcyclic peptide in the U.S. market just in the last month of July. The U.S. multinational company formally acknowledged the invaluable Dishman Carbogen Amcis contribution in bringing this breakthrough therapy to the market. Always at Naroda site, we keep working to some specific CDMO businesses related to semiconductor project for Japan and different fine chemical project for the European market. Apart from this, Naroda site keep receiving also many different inquiries to develop new variants of the old legacy quaternary salt products. For what concerns other CDMO business, we see a steep increase of requests for proposals, and several of them are in the final negotiation phase. Meanwhile, we continue to strengthen our system. We keep also exploring new areas for us, like providing single analytical service to customers. Regarding our soft gel drug operation, we have seen a significant business grow over the last year, and we are very enthusiastic about the new future different opportunity to build long-term CDMO partnership and support eventually commercialization in different geographical areas. The great interest we are receiving from very many different customers from India and abroad is providing a strong platform to initiate the developments to support the broader objective of establishing solid commercial pipeline. As Stefan mentioned earlier, we are very confident for the future of the organization, and we remain focused on continuously enhancing our capability while delivering reliable and compliant solutions worldwide, aimed at patient safety and customer success. After having said that, I hand over the call to our new Chief Commercial Officer, Angela Merrick. Angela, to you.
Thank you, Paolo. Good afternoon, everybody. Hello, my name is Angela Emmerich, and it's nice to meet you all. I am honored to be here today as the Chief Commercial Officer for Dishman Carbogen Amcis. As Stefan referenced, I started my sales career here 21 years ago, and after 6 years, I went on to other top-tier suppliers such as Hovione and Lonza. I'm very much looking forward to getting out there and being closer to the clients by traveling with the team and interacting with our partners face-to-face, particularly as we're about 6 weeks away from CPHI. First and foremost, it's undeniable that we strive for more business. We need to increase our prospecting efforts and work closely with the opportunities that we have to ensure that they close. Also, as previously mentioned, we have added new sales leaders in the past quarter. They each bring unique and relevant skills to their respective areas of the business, and I anticipate that their presence will be impactful. And not only have we introduced this new stable leadership for the various sales teams, we are also actively recruiting for key roles in Europe, such as the UK and Central Europe, to manage some of the accounts that we have. We have also recently signed a new hire for the US West Coast, who comes with a couple decades of experience and will start on September 1st. In addition, we will also be adding some inside sales or prospecting roles to specifically find leads for our services business. We are also looking to capitalize on our integrated offer to differentiate ourselves, especially by leveraging all the assets to provide a competitive offer, particularly between the Carbogen Amcis and the Dishman entities. Further, we're looking to close our first deal with Solonic as our biologics partner in our bioconjugation offering, and we continue to offer our drug product services at a competitive rate to entice clients to secure work with us across the drug substance and drug product offering. And last but not least, I'm doing as much as I can to leverage my network to stay close to the market and our competitors. With this, I'll turn it back over to Stefan. Thank you.
Thank you very much, Angela. Thank you also for joining our company and especially our sales team. We are looking forward for great collaboration. Thank you. With this, I would like to hand over to Harshil Dalal, our Chief Financial Officer.
Thank you very much, Stefan. A very good afternoon to all the shareholders. Regarding the financial performance for the quarter ending 30th of June 2026, it was a soft quarter for us from a numbers perspective, but there were certain specific reasons that we will get into. But overall, the outlook looks quite promising for the year and going into the future. The income for operations for the quarter ending 30th June stood at 6,776 million as compared to 7,080 million in the comparable quarter of last year. This represents a 4% degrowth as far as the revenue is concerned. And the major reason for the degrowth, actually we should have grown, but the major reason for the degrowth is one of the orders that was postponed to the later half of the financial year as compared to what we were expecting should have gone out in Q1 of the year. And that represented almost 10 million of value and a significant amount of operating profit as well. The costs for the quarter stood at 1,142 million. The employee expenses at 3,891 million, very much in line with what we had in Q4 of the last financial year. The other expenses were also under control at about 1,142 million for the quarter. Overall, because of the lower revenue that we were able to book in Q1 of the financial year, the EBITDA stood at 600 million as compared to 1,406 million in the comparable quarter of the previous financial year. The depreciation and amortization was also very much in line with Q4 of the previous financial year. The finance cost showed a positive impact in the sense that the finance costs reduced as compared to the previous quarter. We were at about 370 million for the quarter. All of this resulted into a loss before tax of about 512 million and a tax expense of about 66 million. We also had a foreign exchange impact on the financials, which is also part of the other expenses, which is to the tune of about 117.3 million. And this was mainly on account of the fluctuation between the US dollar to the Swiss franc. As far as the segment-wise breakup is concerned, the CDMO segment posted a revenue of 5,343 million for the quarter as compared to 6,112 million in the comparable quarter of the last year. The marketable molecules segment showed a significant growth. The revenue stood at 1,432 million for the quarter as compared to 968 million in the Q1 of FY26. As far as the margins are concerned, the CDMO segment, because of the deferment of the revenue and the foreign exchange loss, posted an EBITDA margin of 6.3% as compared to 17.9% in the comparable quarter of last year. The marketable molecules segment, which in Q1 of FY26, there was a huge amount of sales of analogs, and hence the margin was at 32%. For the quarter ending 30th June 26, this was kind of normalized at 18.6 million because of higher sales of cholesterol as compared to analogs. The capex that was done in Q1 of the financial year stood at about 4.9 million Swiss francs, and the net debt excluding the lease liabilities stood at 153.6 million as of 30th of June 26. So this was the financial highlights for the quarter, and with this, we would like to open the floor for any questions that any of you might have.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and one on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and one again. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The first question comes from the line of Mr. Harshit Khadka from Robo Capital. Please go ahead, sir.
Thank you for the opportunity, sir. Am I audible?
Yes,
you are.
Yes, sir. So what is the revenue target and EBITDA margin target for FY27?
So we do expect single-digit growth as far as the revenues are concerned, and as far as the EBITDA margin is concerned, it should be similar to what we did last year. Maybe it could be a little bit higher, but that's more or less the guidance.
Okay. And what is the color for Q2 FY27? Like, what kind of numbers are we expecting?
Well, quarter-over-quarter, it would be difficult to give a guidance. What we can give is for the full year, ideally for the next 3 years. But it would be difficult to give at this point a guidance for Q2.
Right, understand. And what is our aspiration for FY28 and 29?
So 28, 29, what we expect is that there should be substantial growth that we are seeing at the India operations, as well as the CDMO part of the business out of the Swiss entity and also out of the French entity, which is our injectables plant. We do expect, at least a double-digit growth in the French entity as well as the India operations. So all of this should help us to achieve more than 10% growth in the revenue year-over-year, and the EBITDA margin should be closer to the 25-26% that we were doing prior to the EDQM issues that we had at the India side.
Okay, sir. All right. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on the telephone keypad. Next question comes from the line of Mr. Keshav Goyal from Grey Hill Capital. Please go ahead, sir.
Yeah, hi, good evening. Is there anything being done to refinance and maybe reduce the debt? I see that about a third of the operating profits are going towards just finance costs of the company. Is there any way to reduce the debt load or maybe refinance to a lower cost of capital?
So that is something which is already work in progress. So what we had done is we had announced in the last board meeting, as well as subsequently we obtained the shareholders' approval for raising funds in foreign currency at the promoter entity level and infuse those funds in the Indian entity, high cost debt, which is primarily sitting in India. So that is something which currently is being worked upon, and we do expect that to happen in the next couple of months or so.
So a little follow-up on that. What is the amount expected and what rate of cost is the promoter lending to the company, and what kind of effect can we see on the bottom line for the same?
Sure. So, we have mentioned the specifics of that particular loan, which was approved by the shareholders in the explanatory statement that was sent out. But for your benefit, the total amount for which we have taken the approval is up to 200 million Swiss francs. Not that the entire 200 million would come in one tranche, but it would be in multiple tranches. And the primary purpose is going to be to prepay the high-cost debt, as well as utilize this way to finance any future capex or working capital requirements. The interest cost is going to be at 4%, all inclusive, and the overall tenor that we are looking at is 10 years.
Perfect. Thank you so much.
Sure.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Preet Nagar from Wealth Finvestors. Please go ahead.
कृपया लाइन पर बने रहिए. The person you are speaking.
I believe Mr. Preet has put the call on hold. Ladies and gentlemen, If you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Amish Sanghvi from Anvil Limited. Please go ahead, sir.
Yeah, thank you for the opportunity. I would like to know how many phase 3 molecules were commercialized during this quarter.
Well, as Stefan mentioned, we had one molecule which was in phase 3, which received approval. It was not in the quarter ending 30th June, but this was just 4 days back. So that was from a big pharma, and that is the molecule which has now gone into the commercial stage.
Okay, so there was none in Q1, right?
No, there was none in Q1.
Okay, thank you.
Sure.
May I add one word? Do you hear me? Stefan speaking.
Yes, Stefan.
Okay. We had last quarter, we could add 3 late phase projects, late phase molecules. Molecules we were handling on early phase 1 and 2, and they got promoted into phase 3. Just as an add-on information.
Thank you, sir. The next question is from Mr. Nick Desai. Please go ahead, sir. Mr. Nick Desai, please go ahead with the question. I believe Mr. Nick Desai is not on the call. The next question comes from the line of Mr. Vivien Joshi. Please go ahead, sir.
Hi, am I audible, sir?
Yes, you are.
Yeah. So I probably asked this in the last quarter as well. So we are not getting a sense as to when this company becomes like a stable, profitable every quarter kind of a company. Because after all, you are in the pharma business and you are like now an outlier where you make losses one quarter and profits one quarter. So some color can be thrown on that. Like.
So if you see our business, it's completely B2B, and many of the shipments, when the customer requires the material, many of this is driven by what they demand and how their molecule is performing, what the market needs, etc. So yes, there would be lumpiness in the business if you look quarter over quarter, and that is something that is kind of inherent in our business, especially because we deal with new chemical entities, and that is something which is very difficult to take out. But and that's the reason we say that it's best to look at our business more on a 2 to 3 year perspective, or at a minimum on a yearly perspective, rather than quarter over quarter.
Oh, that I understand that, but I'm just pushing back this a little bit on this. Normally, mature pharma companies have enough, pipeline and all, so that at least they make a profit. I can understand fluctuations, but we literally fluctuate from loss and profit. So is there an aspiration at all, or you are just, it's okay that this is how business is in your segment? I'm just trying to understand. Is that normal?
Yeah, because say if you add the 10 million of revenue which could not be accrued in the current quarter, then the numbers would have looked very differently. Because if you see our cost base, most of it is fixed in nature, especially the employee cost, which is like 50% of the P&L. That's like fixed in nature. Even the other expenses, more or less, is fixed in nature, because a big portion of our revenue comes from the development work that we do, in addition to and the rest is the commercial part. So as the revenue keeps on increasing, except for the COGS, which are completely variable, the rest of the expenses are more or less fixed in nature. So, if you're talking about 10 million of revenue, this could translate into close to 70% addition to the EBITDA. So that's how the mechanics work. So the more we are able to work on the top line, the more it would translate straight away into the EBITDA.
Yeah, so I'm just understanding. So what is the bottleneck that we are taking the top line? Because I'm just comparing from normal CDMO companies. Usually they have a very steady kind of and they are also B2B. So the B2B logic doesn't apply here. Most CDMOs are B2B companies, and so I'm just trying to understand. So what is the bottleneck which we have internally understood in our sales or whatever that we are trying to address?
Well, it depends, which companies you are comparing to. But for us, if you see, the major cost part lies overseas, especially at our Swiss entity. So, and the major cost over there is the employee cost, which has to be incurred in order to get the molecules that we are developing, because at any point in time, we'll be working on 700, 800 programs across different phases of development. And that's our business model. And we start the journey right with the preclinical phase 1 stage of the molecule and walk through the entire life cycle of development. And then at some point, some of these molecules get into the commercial space. I mean, I don't know which other companies you are comparing with, but maybe those companies might have certain large generic molecules as well, which we do not. They might be having other segments of business, including biologics, which we are not into. So from that perspective, for us, yes, there could be swings quarter over quarter, and that is something that we also saw last year, where we had Q3, which was kind of weak for us, and then Q4 historically has been the strongest quarter for us, because it becomes like a Q1 for our customers, and that's where they want most of their shipments. So that's the cycle, we have to go through. Also, after the pandemic, many of our customers, they had also stocked up a lot of quantities, where, now we are seeing that many of that destocking is also happening.
Okay. Thank you so much. All the best.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on the telephone keypad. We have a follow-up question from Mr. Preet Nagarse from Wealth Investor. Please go ahead, sir.
Yes, hi. Sorry, I had some problems. And I'm coming back into the queue. My question that I wanted to ask was regarding the fundraise or bringing money into the company. The promoters was expected to get some funds. So could you share some updates on that and how that's going, and by what time frame can we expect those funds to come back?
Sure. One of the investors already asked that. I can answer that for
yes, if you don't mind. Because I missed out. I dropped off.
Yeah, that's fine. No problem. So the idea is, so that is something which currently is being worked upon. And the idea is to conclude in the next, I would say, 60 to 90 days. As far as the fundraise is concerned, we have taken the necessary approvals, which includes the shareholders' approval. And since the funds are going to come by way of an external commercial borrowing into the Indian entity, we have also done all of the necessary compliance from that perspective. So it's just about the execution which needs to happen at the overseas entity, and that's when the fund flow should happen.
So the question I have is that for the funds to come, the promoter's entity will be raising that funds on their own name and then bringing the money into the company, right? Is my understanding correct?
That's correct.
Okay. So what is the promoter going to be doing to do that? I mean, is it like pledging properties? Because this is a very large sum of money. So what does the promoter
so it's going to be a kind of combination. Yeah, so it's going to be, largely the personal assets of the promoter as well as guarantees, etc. Everything at the private promoter entity level.
Okay. And you must have obviously got those offers from bankers over there, and all of those must be in hand, right? Or is it that there is
Yes.
You have to go and find the money and all of that, and that's why you're asking?
No. It was only when it was confirmed that, we had gone ahead and taken the approvals, the necessary approvals from the board as well as from the shareholders.
Okay. So then what is the time needed besides? Why do you need another 90 days? Sorry, just trying to understand. What formality?
Yeah, because, it involves certain condition precedents that need to be complied with, certain amount of diligence that needs to be done by the banks, and then it's about the execution of the documents, where again, there are lawyers involved from different jurisdictions. So all of that takes time. And, again, July, August is usually kind of the holiday period here in Europe. So just accounting for the same, we believe that the next 60 to 90 days will be a fair time.
Achha. Okay, one other question I have, Harshad, is that in the past calls it has been mentioned that there is there is a net debt position because there is some cash on the books, which, and then there is debt, right? And then that net debt reduces by the cash that you have on the balance sheet. My question is that, is there a schedule by when that cash would get used to repay the debt? Because last time when this question was asked, you guys had mentioned that there are some prepayment clauses or some charges that would hit you guys if you were to use it now. But there has to be a schedule by when you would be able to start doing it. So is that something you can share with us?
Sure. So basically, that cash, so there are two parts to it. One is the India part and the second one is the Swiss part. So that is that which is sitting at both these locations, and bulk of the cash is sitting at the Swiss entity level. So ideally speaking, we would have want to utilize that cash to pay off the debt in India, but that is something which regulatorily, it is not permitted for a subsidiary to give a loan to the parent, etc. So that is the reason the cash which is lying overseas, we can bring it in the form of dividends, etc. But again, there will be tax leakage, etc. So that cash will be utilized for the purposes overseas at the Swiss entity level, where again the cost of borrowing is quite low. So that is the reason, why that debt is not being paid off and it is kept as deposits in order to get a positive return on the borrowings that are done at the overseas entity. As far as the India debt is concerned, that is what is planned to be paid off by way of raising these funds at the promoter entity level and increasing them as an external commercial borrowing.
But wouldn't that still be the same thing, like the subsidiary paying back the parent? Even if
No,
the ECB comes in?
Because the promoter can give an ECB to the since it's the shareholder or the promoter entity, it is permitted to give an ECB to the Indian entity, but the subsidiary is not.
So the promoter's entity that will directly give money to the Indian entity is what you're saying?
Absolutely. Yes.
Okay. It won't be routed via the subsidiary to the parent?
No. It will be a direct infusion.
Gotcha. Okay. All right. Great. Thank you.
Sure. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on the telephone keypad. We have a follow-up question from Mr. Harshit Kakri from Robo Capital. Please go ahead, sir.
Hi. Thank you for the opportunity again. So what is going to be our debt level and interest expense for FY27 and 28?
Well, from a net debt perspective, I think we should be somewhere around 140 to 150 million as far as and this is in Swiss francs, and that would be the right way to look at our debt. This is not taking into account any infusion coming in from the promoter entity level. This is just what is in an as-is situation. We expect that the net debt should reduce by roughly about 8 to 9 million. As far as the interest expense is concerned, I would say it would be similar to what you see right now, somewhere between 35 to 40 crores. Again, not taking into account the additional promoter infusion.
Okay, so 35 to 40 crores for the full year?
Oh, for the quarter, sorry.
Right. And for the full year, we are seeing 120 crores?
Roughly about 130 to 140 crores.
Okay. All right. And the margins are expected to be better than last year, so we have to do around 550 crores of EBITDA for the next 3 quarters. So how confident are we on this?
Well, that is what we are working. As I explained earlier, we will have to try and see how we can increase the top line, because the more revenues that we are able to get, it will straight away translate into the bottom line. So that is something that we are working on, and now we also have, as introduced, we have the new Chief Commercial Officer also on board. So that is something that we are working on, and we are fairly confident to achieve the EBITDA margin similar to at least what we did last year.
Okay. Now, are promoters going to pledge the shares of Dishman, which is the listed entity, and if yes, by how much?
Well, right now, there is no plan to pledge the shares. in order to raise any funds. I mean, if there is a requirement at the promoter entity level, there could be for a brief period or for a smaller amount, but nothing concrete, which has been decided as of now.
Okay. All right, sir. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Mr. Venkata Padwala. Please go ahead, sir.
Hello. May I audible? Hello?
Yes, sir.
Yes, you are.
Yeah. So my first question is related to the revenue and the profit guidance for Indian entity for 27. That was the first question.
The Indian entity, as such, for the current financial year, the revenue should increase by at least 30 to 35% as compared to the previous year. And as far as the margins are concerned, at an operating level, we should be at close to about 10%.
So in the last year Concall call, so I hear that something, the new projects are coming to India entity, and some of the client visits also completed in the last year itself. So can you throw some light on what is the current status of those new projects coming to India?
Sure. So as Paolo Arbanino, our Chief Operating Officer, already explained, we have already signed one tech transfer from Switzerland to India, and we are in advanced stage of concluding 3 more tech transfers. We also had successful customer visits. Maybe Paolo, if you want to highlight that a bit more, what happened over the last 3 to 6 months.
Yeah. So as I mentioned earlier in the starting, so there is this part of projects that we are tech transferring from Switzerland to India. So one has been already approved, so we already kicked off. We already start the tech transfer, and it will be completed by this year. The second tech transfer, which is a major tech transfer, is a major project from Switzerland to India, and it's been already started. And so these are, then there are the 3, as I said, and also Arshil mentioned before. These are just the tech transfer. Then there are the CDMO business. So there are the CDMO we are seeing at Naroda site, also at Babla site. So we have seen big interest from some MNC in Naroda. So as I mentioned before, one of the projects in Dishman is also using a molecule which has been launched just one month ago in the USA for a big MNC. There are other, we see actually really several CDMO business very interesting in Naroda side. At the Babla side, we are seeing a big project coming, mostly from the connection with Carbogen Amcis. So we are just closing in this moment. We are in this phase of negotiation with several CDMO projects, and other projects which are also growing. So there are really many parts of the business. There are also businesses within us and the entity in Carbogen Amcis in Europe. So we are restarting also some API for our entity in Netherlands. So this is another project that we are restarting. And then there are other businesses which are related to services. So we are also exploring this business of externalizing and do services for analytics. So there are very many new projects coming all together. The biggest for sure are these projects related to the tech transfer. But we are seeing a very interesting project also coming to Naroda, Babla, from the new CDMO.
So one question related to this tech transfer product. So is it something tech transfer is related to the ADC drug that we are supplying to Japanese customers, or is something other drug?
No, this is not related to the Japanese customer.
Okay. So, Arshad, one more question. The current Indian entity is going to grow at least 25 to 30% this year, right? Can we assume that, double-digit growth on overall entity, Amcis level revenue growth or entire, global revenue growth?
For the whole group, we expect it would be in single digits. Largely because, one, we have the French entity where, again, it's taking more time than expected to get it to a break-even stage level. So it would take some more time. We have, as Stefan also mentioned earlier, the RFPs have been increasing, some really exciting projects that we are seeing, but all of that getting translated into revenues, it might go into the next financial year. Apart from that, on the CDMO piece at the Swiss entity, we have seen molecules now moving into phase 3, one of the phase 3 molecules going into commercial. But still, just from a market perspective, we had seen a bit of a slowdown as far as the funding in the biotech companies are concerned, who are our main customers as far as the development work is concerned. We have the Sprint initiative focusing on the early phase development work. So all of that coming to fruition might go into the next financial year. So for the current year, we do expect that it would be a single-digit growth.
Okay, thank you. That's it.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on the telephone keypad. The next question comes from the line of Mr. Ramanuj Chandak. Please go ahead, sir.
Hello, sir. Am I audible?
Yes, sir.
So my question is regarding goodwill. Right now, how much goodwill is still existing on our balance sheet?
Well, on a consolidated basis, it would be more or less similar to what we had as of 31st of March 26, except that it's restated at the end of every closing period at the closing exchange rate. So it should be in excess of 4,000 crores.
So the goodwill is in Swiss entity. I mean, it is denominated in Swiss francs.
No, so this is the goodwill which arose. So there were two parts to the goodwill. One is the goodwill which is existing on the India standalone balance sheet, which we amortize over a period of time. And second is the goodwill on consolidation. But this figure gets restated at the closing exchange rate because all of this goodwill pertains to the investments that the Indian entity has in its wholly owned subsidiaries. And all of these investments were fair valued in 2017 when we had a merger between the erstwhile Dishman Pharmaceuticals and Chemicals Limited with its wholly owned subsidiary Carbogen Amcis India Limited, and hence the combination was the Dishman Carbogen Amcis Ltd entity. So that's the goodwill, which represents the investments in our wholly owned subsidiaries, which is the goodwill which is restated at the closing exchange rate.
I mean, right now, which goodwill are we amortizing?
That's the goodwill that we have on the India standalone balance sheet. I think the outstanding amount would be close to about 550 odd crores.
So for the remaining goodwill, there is no amortization?
There is no amortization. It is tested for impairment at the end of every financial year. That is what it is.
I mean to ask, basically, don't you think it would be better for Dishman to have assets that produce income, unlike goodwill, which is just an accounting asset? I mean, how long it will take for the goodwill to go to zero?
Well, the goodwill would remain on the balance sheet because, for the goodwill to be written off, what it means is that the asset in which the investment has been done is not yielding value. But that's not the case, because the asset that it represents is the investment in our Swiss entity, in our Dutch entity, UK, Shanghai, etc., all of which are yielding value. And that is what the impairment testing happens for at the end of every financial year. So that's the goodwill which arose on account of the consolidation, and that is something which would sit on the balance sheet unless and until we find a way to write it off through the reserves.
Yes, sir, it means until March 31st, 2026, we were amortizing that also.
No, not the goodwill on consolidation. It's just the goodwill on the standalone balance sheet, which is amortized.
I mean, till when were we amortizing the whole goodwill? Till which quarter?
Never. The whole goodwill has never been amortized. So if you take 2017 balance sheet and onwards, the goodwill on consolidation has always remained and restated at the closing exchange rate at the end of every year. The goodwill on the standalone balance sheet, which originally was about 1,350 crores, has now been amortized to about 550 crores. So about 800 crores has been written off.
Okay, sir, that's it from my side.
Because just to complete, because the Ind AS does not permit the amortization of the goodwill, but just the testing, the impairment testing at the end of every reporting period.
Okay. I mean, the board is going to test every financial year end. How much it is to be impaired, right?
I'm sorry, I couldn't hear you well.
I mean, how is it determined? How much should the impairment be? How is that?
No, so we get external valuation reports done, and basis that valuation is compared with the value which is sitting on the balance sheet, and if there is any devaluation that is seen, that is what would be written off.
Okay, sir. That's it from my side.
Sure.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on the telephone keypad. The next question is from the line of Mr. Harshit. Please go ahead.
Hello. Yes, sir. Am I audible? Sir, so as you said that you have 2 phase 3 molecules that have been commercialized, sort of revenues can we expect?
Sorry, just a correction there. What we mentioned is that we had 2 new molecules which entered phase 3, late phase 3, and 1 molecule which has recently gone commercial, so moved from phase 3 to commercial.
Yes, sir. So what would be the incremental revenue that we could expect from that molecule? Just an idea.
I think we would have to wait from the customer for the customer's feedback on what do they forecast for the next 12 months, 24 months going into the future. Because initially everybody thinks it's a blockbuster drug, but we'll just have to see. I mean, the molecule looks quite promising. It received an accelerated approval, but yeah, I mean, at this point it would be quite premature to give a number.
Okay, and sir, on the raising side, 1 week back you raised around 75 CRs of new NCD at 10%. So has the ECB refinancing a bit late, or every time we are raising funds on the NCD?
Well, that's only for the short-term purposes, but as soon as the ECB funds are in place, we should be able to either repay or prepay many of these facilities. Again, taking into account the lock-in periods, prepayment penalties, etc.
Okay. And sir, one next question was on the Japanese innovator that it has got approximately, I would say, 10 approvals of the drug from September to till date. So has any communication been done of a big capacity going forward for the drug, or because every month they are getting approval for some of and different geographies also. So
as you might be aware, we are already in the process of completing the second co-investment for the customer, and that is something that we expect during the course of the next calendar year to get completed. So that additional capacity would help us to provide additional quantities to the customer.
Okay. And one question on the EBITDA side, because the Q1 EBITDA was approximately 60 crore, and your guidance was 20%-21% for the full year. The remaining quarters should be, done with an average of 200 EBITDA at least. What makes you believe that, this margin will be hopefully done for the year?
Well, it won't be 200 for each of the quarters, but we'll have to see again, depending upon how the shipments go out, et cetera. What we are seeing right now is that we should still be able to achieve similar kind of EBITDA as we did last year. And the important thing is to focus on the top line.
Okay. And another question. Has the RBI approval been given to ECB? Is there any process,
Yes.
RBI have? Okay.
Yeah, that's already in place.
Okay. Thank you. And what was the share of the ADC revenue, sir, in this quarter?
In this quarter, the total ADC revenue, you mean? That would be close to about roughly about 150 crores.
How much? 60 crores?
No, 150 crores.
And
But this includes everything, just the linker, the payload, the hypo molecule, everything put together.
And the order that was deferred, so was this specifically from the Japanese innovator for the ADC supply?
Sorry, interrupt you. Would request you to join back the queue for more questions.
Okay.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Julie Mehta from 360 ONE Capital. Please go ahead, ma'am. Ms. Julie Mehta from 360 ONE Capital, please go ahead with the question. There is no response from Julie Mehta. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. There are no questions. I hand over the call now to the management for the closing comments.
Okay, so I'll take it over. Thank you very much for all your interesting questions. And I would say as a summary, all in all, Dishman Carbogen Amcis is very well positioned to conquer additional new business. We are looking very optimistically to our future. We have opened up capacity. We have strengthened our collaboration between Dishman Carbogen Amcis and Carbogen Amcis. And with this, I thank you again for your interest in our company, and I would like to close the call and wish you a nice evening. Thank you very much.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. On behalf of Dishman Carbogen Amcis, we thank you for your participation and for using Dorsavas conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.